Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close look at an expert advisor called Structure Shift Continuation. This is a pure price action strategy, inspired by the ICT concept of a break of structure, and it uses no traditional indicators at all. There are no moving averages and no oscillators here. The only thing it watches is the raw structure of the market itself. By the end of this video, you'll understand how it reads swing pivots, how it confirms momentum with strong candles, and exactly how it places its trades. Let's dive in. So what exactly is the Structure Shift Continuation Expert Advisor, and who is it built for? At its heart, this is a momentum continuation strategy grounded entirely in price action. It belongs to a family of techniques popularized by ICT, or inner circle trader, concepts, and the central idea is the break of structure. Rather than relying on lagging indicators, the EA reads the market the way a discretionary price action trader might, by tracking the swing highs and swing lows that define the current trend. There are no moving averages here, no relative strength index, no average true range. The only thing driving this strategy is the structure of price itself, read directly from confirmed fractal pivots. When price decisively breaks above a recent swing high, the EA interprets that as bullish order flow continuing, and it looks to join the move. When price breaks below a recent swing low, it reads bearish continuation and looks to sell. Because it's pure price action, this EA is flexible. It can be applied to any symbol, including currency pairs, indices, metals, or crypto, and to any time frame you prefer, from fast intraday charts to higher swing trading charts. The behavior is shaped by just a handful of parameters. The swing lookback that defines how significant a pivot must be, the DisplacementBodyPct that filters for strong candles, the risk-reward ratio, a stop-loss buffer, and a fixed lot size. Who is it suited for? Educationally speaking, this strategy will appeal to traders who think in terms of market structure and momentum, who prefer clean, rule-based entries, and who like their risk defined by the chart rather than by a fixed pip count. It's a continuation system, so it tends to favor trending and impulsive conditions over quiet, range-bound markets. Remember, everything here is for educational purposes only, and nothing in this video is financial advice. Let's look under the hood at the exact logic. Let's break down exactly how the Structure Shift Continuation strategy makes its decisions step by step. Everything begins with market structure. On every newly closed candle, the EA looks back a fixed number of bars, set by the swing lookback parameter, and checks for a fractal pivot. A confirmed swing high is a candle whose high is strictly greater than the highs of every bar to its left and right, within that lookback window. A confirmed swing low is the mirror image, a candle whose low sits below all of its neighbors. When the EA finds one, it stores that price as the most recent swing high or swing low, and marks it as fresh and unbroken. Next comes the signal itself. The strategy is waiting for a break of structure. For a long trade, it needs the most recently closed candle to close above the last confirmed swing high. But a simple break isn't enough. It also demands displacement. Displacement means the candle has a strong body relative to its total range. The EA measures the body as a fraction of the high-to-low range, and that fraction must meet or exceed the DisplacementBodyPct setting. The candle must also be bullish, closing above its open. When all of that lines up, a decisive close above structure, on a strong bullish candle, the EA signals a buy. The exit plan is built into the same moment. The stop loss is anchored to structure. It sits just below the last confirmed swing low, pushed a little further out by the stop loss buffer fraction, which is measured from the signal candle's range. That distance from entry to stop becomes the trade's risk, or 1R. The take profit is then placed at a multiple of that risk, defined by the risk-reward parameter, which by default is 2 times the risk. So a default trade aims to gain 2 units of reward for every 1 unit it puts at stake. A short trade is the exact mirror. The EA waits for a closed candle to break below the last confirmed swing low with a strong bearish body. It then sells, places the stop just above the protective swing high, and targets the same risk-reward multiple below entry. There are 2 important guardrails. The EA only holds one position at a time, and it lets the structural stop and target manage that trade. And each swing level can be broken only once. After a break, A brand new pivot must form before another signal can fire in that direction. That keeps the strategy patient and helps it avoid chopping in and out of the same level. Let's read through the actual MetaQuotes language code, just as you'd see it inside MetaEditor. At the top are the input parameters, the dials you can adjust before running the EA. SwingLookback, defaulting to 3, sets how many bars must be lower or higher on each side of a pivot for it to count as a confirmed swing. A larger value means rarer, more significant structure. DisplacementBodyPct, at 0.55, is the minimum fraction of a candle that must be solid body for the break to count as decisive. RiskReward, at 2, controls how far the take profit sits relative to the stop. Stop-loss buffer fraction, at 0.25, adds a little breathing room beyond the protective swing. Lots fixes the trade size, and magic tags the EA's own orders. Now to the signal logic. The EA reads the most recently closed candles open, close, high and low, and computes the body fraction. The bullish branch fires only when several things are true at once. There is a valid swing high. That swing high has not already been broken. The candle's close is above the swing high. The candle is bullish, and the body fraction meets the displacement threshold. When that passes, it marks the high as broken so it can't trigger twice. It reads the ask price as the entry, sets the stop just below the protective swing low minus the buffer, and measures the risk as entry minus stop. Provided that risk is positive, the take profit is entry plus risk reward times that risk, and it sends a buy order through the trade object. The bearish branch, just below, mirrors everything. A strong close beneath the swing low triggers a sell, with the stop placed above the swing high and the target the same multiple below. Clean, structural, and completely indicator-free. Let's walk through this illustration to see the strategy in action across 2 trades. On the chart you can see the candles, plus 2 structure lines the EA is tracking. There's a swing high acting as resistance, drawn in red, and a swing low acting as support, drawn in green. We begin with the long setup. Price is coiling just beneath the confirmed swing high. Then a strong bullish candle pushes up and closes decisively above that swing high line. Notice how solid the candle's body is. That's the displacement the EA requires. This triggers the buy entry, shown by the gold marker. The stop loss is placed just below the protective swing low, and the take profit is set at twice that risk distance above entry. Over the next few candles, price follows through, climbs in our favor, and tags the take profit level. That completes the long trade. Now watch how the structure shifts. After the rally, price carves out a new, lower swing high and a fresh swing low higher up the chart. The support and resistance lines step upward. Price then stalls and rolls over. A strong bearish candle breaks down through the new swing low, closing firmly below it with a heavy body. That decisive break to the downside triggers the sell entry. This time the stop loss sits just above the protective swing high, and the take profit is projected the same 2-to-1 distance below. Price drops away, follows through, and reaches the downside target. Notice the key theme that gives this strategy its name. The structure shifted. The EA didn't try to predict a top. It simply waited for price to break the new structure and continued with the momentum. Each level was broken only once, and a fresh pivot had to form before the next signal. This is for educational purposes only and not a prediction of real market behavior. And that brings us to the end of our deep dive into the Structure Shift Continuation Expert Advisor. We've covered how it reads confirmed swing pivots, how a break of structure with displacement triggers a trade, and how its stops and targets are anchored directly to market structure. I hope this gave you a clearer understanding of how a pure price action system can be turned into rules a computer can follow. Remember, everything in this video is for educational purposes only and is not financial advice. If you found it helpful, please hit that like button, subscribe for more MetaTrader 5 strategy breakdowns, and let me know in the comments which EA you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.